Hello and welcome to Virtual Investor Conferences. On behalf of Harbor Access Investor Relations, we're very pleased you've joined us for our next live presentation from Amerigo Resources. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Aurora Davidson, CEO of Amerigo Resources, which trades on the OTCQX Best Market under the symbol ARREF and on the TSX under the symbol ARG. Welcome, Aurora.
It's great to be here and to join this conference. So we can start with a presentation of Amerigo Resources. Amerigo is a copper producer, but as we go through the presentation, you will see that we are by no means a typical mining copper producer. What we do at Amerigo is unique. We are the only company in the world that does this, which is producing copper exclusively from waste materials. So this is a unique story in that we are producing a sustainable copper from material that would otherwise be lost without that benefit to the economy. Our forward-looking information is available on our website, as is the case with our presentation, and that's at amerigoresources.com. So what is the value proposition that we have at Amerigo? Let me start by saying, as I mentioned briefly in the introduction, that we recover copper in a unique way. Consider us more of a copper factory than a copper mine. We have a very simple and sustainable business model, very predictable operations, which is not necessarily what occurs in a traditional mining setup, and predictable cash flow. We pay a consistent yield with performance kickers. You will see that we have a very well-structured return of capital strategy that consists of regular quarterly dividends, share buybacks, and performance dividends. Our current yield on the quarterly dividend is 10.2% based on our latest monthly closing price. What we're doing at Amerigo is rolling out a unique set of ESG credentials, the most important of which is the fact that we are producing copper from waste materials without mining any additional ore. Our corporate structure can be summarized with 165 million shares outstanding. We have been very active in the last 2 years, retiring shares in the market, and have retired approximately 11% of our issued and outstanding. In terms of dilution, we only have options. There are no warrants associated with our capital structure. Latest share price, closing price at last month end was $1.18 Canadian. We have a market cap of 140 million. As I mentioned, a yield of 10.2%. And just to give you an idea of the magnitude of our return of capital rollout, in 2022, we returned $28 million to shareholders. All of our figures are US dollars, except when we refer to share price in Canadian. Cash and restricted cash, 19.4 million as of the last quarter end of September 30th, with a declining debt position of $21 million. We have a combination of retail investors, institutional investors, management holding a significant portion of the company, and one significant shareholder with 13% of our issued and outstanding. So what we do at Amerigo is essentially capturing lost value, capturing copper that is contained in tailings. This is, as an end product, a copper concentrate that is totally similar. There is no differentiation between a traditional mined copper concentrate and the copper concentrate that we produce. And the amount of copper that we produce is not insignificant. Our annual production is on the range of 30,000 tons per annum, around 64 million pounds. This is what you would expect a medium-sized copper mine to produce. So we're the equivalent of a mid-sized copper mine. So how do we do this? We received the waste stream, the tailings. We have the contractual rights to the tailings of one of Chile's largest copper mines. In fact, the world's largest underground copper mine, which is Codelco's El Teniente mine. El Teniente produces a significant amount of tailings on a daily basis, being one of the major copper producers in the world. That source of current production we know as fresh tailings. And we also have the rights to historical tailings deposits that El Teniente had basically accumulated over a period of decades, which are located next to our processing facility, which is located in Chile, and to which we have the rights. So just to recap, we have the rights both to fresh production, current day production, and older production, which contains a higher amount of copper than the current production. We process these waste streams in a traditional concentrator. This is similar to the process that would be found at the end of any copper mining operation. And we produce copper concentrates. We also produce molybdenum concentrates as a byproduct. And we sell those concentrates at market prices. So we are not doing this work for a fee or for a proxy to copper price. We're doing it for full market prices for both copper and molybdenum. And given the life stage in which we are in our company, we don't need to invest a significant amount of capex back into the business. So this gives us the ability of returning profits to shareholders through our return of capital strategy. For those people that are finding it a little bit hard to sort of picture what the Amerigo process is, I find it very useful to compare ourselves with a wastewater treatment process, which all of us can run on the back of our minds. This essentially is very, very comparable. We receive waste material. There is an industrial process involved in recovering copper from that waste material, and essentially getting an economic value in the form of the copper concentrates. We have, as I mentioned, a traditional mining concentrator process at Amerigo. It consists of classification, grinding, flotation, and drying and filtration. So it is a very well-tested, tried and true process that is used everywhere else in the world. The difference between a wastewater process and an Amerigo's process is in the yield, because as I mentioned before, we are essentially exposed to copper prices. In periods of strong copper prices, as what we have seen in the last 3 years, we are able to generate very robust operational cash flow. We have low capex requirements, and we have a structured debt that is being repaid in an organized way. So that gives us with a significant amount of free cash flow to equity that is being returned to shareholders. So we have that additional exposure, and that can be evidenced in the yield between a wastewater treatment facility, which traditionally pay 4.3, 4.5%, versus Amerigo, which is paying currently at 10.2% yield. In terms of our ESG credentials, we are participants of the circular economy. By definition, we're capturing lost value out of critical materials. This is significant. I mentioned there is no other company in the world that is producing copper exclusively from waste material, from tailings, at the rate that we are producing it. We're providing a significant amount of local employment in Chile. More than 1,000 jobs are directly attributed to our operation. We have diversity in our board and in our management team. All of our power, and we use a lot of power. Power is our most significant cost in our operational setup. All of our power comes from renewable power. It's all hydro. So we are not trying to be net zero in 2030. We are essentially a net zero operation. In terms of environment, by repositioning old tailings, we are reducing third-party environmental liabilities. We don't ever get to own the tailings. We only have the rights to extract copper, extract moly from those tailings, and then we return them to El Teniente. And we're also a very extremely efficient operation in terms of water utilization, which is critical when you're talking about mining operations. So just to recap, we are not a mining company. We have no environmental liabilities. We don't have to invest money to explore for future reserves. We actually employ no geologists. We have minimal sustaining capex, and we are eliminating the world's need for a mid-sized copper mine. We operate in Chile. Chile is a company with minimal jurisdictional risk. It is the world's leading copper producer. So copper is considered the salary of Chile. It has a significant recognition in terms of its economic importance in the country, which is critical when you're talking about social buying into an operation. We have a strategic relationship. It goes back to more than 30 years with Codelco, specifically with Codelco's El Teniente mine. Codelco is the world's biggest, largest copper producer, and it is a leading actor in Chile's economy. So we are very well positioned in a prime business jurisdiction and partnering with the country's most significant economic contributor. In terms of how much material do we have to process, it's not unfair to say that it's virtually inexhaustible. Just to give you an idea, El Teniente, which is the mine from which we get our tailings, began operations in 1905. It currently has a projected life of mine to 2082. So as I mentioned, we are processing all of the daily waste material from El Teniente, and we also have access to their historical tailings deposits. Our current agreement with El Teniente runs to 2037, which doesn't mean it will end in 2037. We normally renew our agreements with them when we get closer to the expiration date, as has occurred to us in the past. We have essentially what I call a multi-year capital allocation strategy, and I would like to walk you through our long-term view of the business. What are the major assumptions that we have when considering our business model? We assume that MVC's production is a stable production and that we're going to be producing north of 60 million pounds of copper a year. We have 3 years of outperformance, proven operational excellency. So our operation is usually a very stable operation. And then we'll talk about the short-term variances. Another business assumption that we make is that copper prices are stable, poised to go up. So essentially, we are bullish in copper prices, given just the structural growth that the copper market has had for the last 20 years, and the additional demand that is coming online through green energy. For example, this year, despite economic contraction worldwide, copper has continued to grow in consumption, and that growth is coming basically from electrification in India and from China's green economy initiatives, particularly associated with solar power rollout and electric vehicles. So there is that view that copper prices are either going to be stable or are going to be growing in the following years. We also assume that the Chilean peso is either stable or tends to be behaving to a weaker position against the US dollar. So that is an inherent hedge in our cost structure, given that a significant amount of our costs are borne in Chilean pesos. Our sustaining capex is normally of a low basis of around $8 million per year. This is quite unusual in the mining industry, and that's why we always refer back to this point. We have spent, or we have invested in the company more than $100 million on an expansion that has been completed, that was completed a few years ago, and that has set us to produce the amount of copper we're producing with just requirements on sustaining capex, but without any further significant investment needs. We have declining debt levels. We have financed our expansions through debt, not through equity issuance. And we have gone from having a debt of $100 million to a debt of $21 million that is declining by $7 million each year. So by June 2026, essentially, we will be debt-free. And we have a working capital line of credit in place to help us through the traditional cyclicality that can occur in the copper market with prices that vary from month to month or from quarter to quarter. Now, what are some of the short-term variances that we face in our business? In terms of production, we face usually no variances. In this year, we have faced production disruptions due to flooding events, due to very heavy rains in Chile. We basically have restored back our normal operations at the end of September. Q4 is performing not only on track, but is exceeding our normal production rates. So we're back into normal and predictable operations. Copper prices have been stable in the last years. In 2022, the average copper price was $4 per pound. And up to actually September, it says there August, but it should be September. Up to September of this year, it was around 3.90 cents per pound. So copper prices have been holding up despite macro headwinds this year. A Chilean peso, also quite normal. And in terms of sustaining capex, 2023 is for us a high capex year. We have invested on building a new sump for our historical tailings. We have invested in risk mitigation projects, but we're going back to normal on the rate of around $8 million per year in 2024. Our return model is very simple, as we have described in the prior slides. So that brings us also to a very simple and well-rounded capital return model that we rolled out 2 years ago that has had tremendous success for Amerigo. The basic premise of this return of capital model is that because we do not require growth capital and we're generating healthy operational cash flow, we're in a position to return capital to our shareholders. So how do we do that? We have 3 avenues of distribution. We have the quarterly dividends. In terms of quarterly dividend, we want it to be a safe, predictable dividend that can be paid each quarter. We have share buybacks. We have had 1 substantial issuer bid, 2 years of normal course issuer bids, and we are renewing our normal course issuer bid for next year. As I mentioned, we have retired around 11% of our shares in 2 years. So we have been very active in this facet of our return of capital. And a third avenue, which we haven't yet used, is the performance dividend. And essentially, that's a performance to copper price. In copper price environments that are higher than what we have seen in the past, so north of $4 per pound on a sustained basis, the most likely avenue of returning surplus cash to shareholders would be through a performance dividend that can be declared at any point in time for any amount. So we want to keep full flexibility as a key attribute of those performance dividends. So the foundations of our return of capital model, to recap, is basically we don't need a capital, we can return it. We have multiple tools to do that. We are providing a utility-like yield with kickers at higher copper prices. We are reducing shares opportunistically when we can do that. And we're using this strategy basically to become a preferred holding of yield, value, and ESG investors. So those are the key drivers of our return of capital model. Let's go through some appendices here to round up the presentation, and then we can go on to Q&A. Water is a key issue, both in the mining industry and particularly in Chile, which has been facing drought conditions for more than 10 years. We have taken significant steps at Amerigo to mitigate our water supply risk and to ensure that we always have enough water reserves that allow us to operate for at least 18 months on a rolling basis ahead of us. So we don't have to be worrying. We don't want to have that uncertainty in terms of our ability to operate unrestrictedly associated with water supply. So we have been managing that quite effectively for the last 3 years. Where are we getting our water? We have a unique position in that most of the water that we get is coming from fresh tailings. This is something that obviously other traditional miners cannot have because they don't work with tailings. But tailings to us come by gravity from the El Teniente mine in the form of a slurry. They have to contain water, and we get a lot of water that way. We are also very efficient in recirculating water. We have industrial water recirculation circuit within our plant in order to recover and reuse a lot of the water through the process. There's rainfall, there's water rights, and we have the ability of storing surplus water in a water dam. So currently our water reserves are in excess of 10 million cubic meters, which is more than sufficient for 18 months of operation. Normally our normal storage rate is around 4 million cubic meters. It's substantially more than that due to the heavy rains that we experienced this year in Chile. A little bit of a recap of 2023, which is an unusual year. We went from drought to floods. The amount of rain that we have seen in Chile is significant, and it created some operational hiccups that made us reduce our guidance on 2 occasions. Both because of a flooding event that impacted our infrastructure and forced us to make some repairs, and also because of heavy rains that precluded us from processing historical tailings for a number of weeks. So our original guidance of 62.3 million pounds of copper this year has been reduced to 57.8. It is unusual, but as I mentioned, we're back to normal production as of the end of September of this year. Amerigo receives and has the contractual rights to the historical tailings. So instead of investing the significant amount of money that mining companies invest to have a resource, we have a contract. And our consideration for receiving those tailings is paid through royalties to El Teniente that are based on production and also on copper prices. So the higher the copper price, the higher the royalty factor, and the lower the copper price, the lower the royalty factor. This is significant in that in a low copper price environment, which we haven't seen in 3 years, our royalties decline substantially, and that protects our financial performance at Amerigo. This is a scale of the royalty factors that we pay on a dollar per pound basis at different copper prices. You can see, for example, at $3, we're today at 370. So let's use 360. Our royalty factor is 97 cents per pound. There is a range of copper prices within our contractual structure. It is a minimum of $1.95 and a maximum of $4.80 per pound for the fresh tailings, and a minimum of $1.95 and a maximum of $5.50 for the historical tailings. When we get to a point where we are operating outside of these ranges, basically we have to get together with El Teniente to continue the slope of the line and continue with the same sort of distribution of royalty versus copper price alignment. And as I mentioned, we also produce molybdenum as a byproduct. So we are a copper producer. We will never prioritize producing moly over copper, but we get moly as a bit of a cherry on top of a cake. Our guidance for molybdenum production for this year is 1 million pounds. And a way of looking at the benefit of moly is shown in this graph, which basically provides a credit to our cash costs coming in from the molybdenum that we produce and we sell at market prices. Moly prices this year have fluctuated a lot. We were at moly prices of $30 per pound in the first quarter of the year. It's currently around $16 per pound. But you can see there that under these price conditions, there is a credit to our cash cost of anywhere from 20 cents to 40 cents coming in from the moly production. So it is nice to have it. It helps us add something else to the attractiveness of cash generation, but it's not the core of our business. In terms of management, we have a very lean management team. In Canada, we basically have our executive chairman and director, Dr. Klaus Zeitler, myself as CEO, Carmen Amezquita is our CFO, and that's it. After that, we go on to the MVC level. MVC is led by Christian Cáceres, a Chilean who has been with us for almost 30 years as general manager of MVC. And in terms of our board of directors, we have 7 directors, whom are all shown in our slide. And basically, that is the end of my presentation, and we can open up to questions and answers. I have one here. Will you remain solely focused on El Teniente for the next 10 years? We will remain focused on El Teniente in respect of the MVC operation. It is the core of our business. We can obviously look for similar operations with other operations elsewhere in the world, elsewhere with Codelco. But El Teniente is quite unique in the sense of the dual benefit of having fresh tailings and historical tailings. The way in which we get the tailings from El Teniente is quite unique. We get them by gravity, so there is no cost associated with getting those tailings from their mine to the MVC facility. And of course, the contractual arrangement that we have with El Teniente gives us full exposure to copper prices. So if you consider volume, location, and commercial wherewithal as key attributes, we would look for other opportunities, but those are key aspects of any successful rollout with other players. What keeps Codelco from doing a more thorough job of extracting that copper rather than passing the tailings to Amerigo? That is a question of metallurgy. There's always a trade-off between volume, throughput, and recovery. You cannot have your cake and eat it too. They are focused on volume. They are focused on processing significant amount of ore, and their recovery is quite good, but they cannot recover everything. You can only focus on so much, and in an operation of a volume of El Teniente, it's not unusual to leave some copper behind. Everybody does it, and that's essentially how it works out. What is your dividend payout ratio and 24 expectations for dividends and buybacks? We're paying a dividend right now in excess of 10% on the quarterly dividend. Maintaining our dividends is key to us. we will be focusing in terms of return of capital, the quarterly dividend, and only if we can ensure that we can continue defending that quarterly dividend, we will go into share buybacks or into performance dividends. At this point in time, given the operational disruptions that we had this year, we suspended our share buybacks in May precisely to ensure that we can continue paying that dividend going forward. What is the lifespan of our plant? Our plant basically can process copper for as long as we have material to process, and we have a contract to process that material. So in terms of our contract, as I mentioned, it currently runs to 2037, but it will be probably expanded after that, and El Teniente has 50 years or more of life of mine ahead of them. And I think that is all the time we have.